Hey everybody, good evening. It is Sunday, June 8th, 2025. Let's get started here by looking at the futures. And here we have on the left is the 1 hour chart for the S&P 500. Below that is the Nasdaq, and on the right is a 1 minute time frame. I don't spend a lot of time looking at 1 minute time frames. When we have a new session, you always want to start it on a 1 minute time frame to get some detail. And then as the session progresses, you move it out to a 2 minute, 5 minute, 10 minute, whatever. But so far, we have a little bit of weakness in the futures. It's nothing really to be worried about. This is the daily VWAP. This is the brand new one. And this, of course, will become the week to date volume weighted average price as well. We had initially sold off. Now we're kind of fighting in that area. I don't really view it as anything more than just a little bit of noise while we're still above some key levels. The blue on the hourly time frame is the month to date anchored VWAP, and the orange, of course, is the 5 day moving average. While we're above a rising 5 day moving average, the market I consider to be innocent till proven guilty for my time frame, which is that of a swing trader. So going into the week, the key levels initially are going to be found down near the pullback low from Thursday. So in both of these markets. So that is really kind of where you want to start to measure risk against initially. If we break below that, then perhaps we see a little bit deeper selling, but there's nothing here indicating that that's imminent. Bitcoin, let's talk about some of these cryptos. Bitcoin, it looks like it had a failed move lower. It shook out to the anchor that we've been looking at for the last couple of weeks, and that's exactly where the buyers were found. Now, I think it's likely that we're going to see something. Where'd my little trend tool thing go? Here we go. I think it's likely we'll see something along the lines of just a little bit of consolidation in here, maybe build a shoulder, head, shoulder, and then break out past 106.5, and we could be heading for a test of the all-time highs after that. This, of course, is the prior high, and we've had a little bit of trouble with that right now, but it's not really anything to be concerned about. As I've mentioned, I'm still holding some Ethereum. I'm not going to let go of that. And I think that if I'm you know, realistically, I have an alert down here. I don't even know what it is. I think it's at 2,300. And I would consider, what to do down there. But until it does that, I'm not thinking about it. It's trying to hold the anchor from the beginning of this move. But over the last couple of weeks, it's got this pattern of lower highs and lower lows. So really nothing there that excites me or concerns me. Solana, I do own some of this, as I've mentioned. It seems to be wanting to hold the anchor off of the lows from this year. So we had a little shakeout. This is my key level. I want to see it hold down at about 140. Until it breaks that, I really don't see a concern. I do have an alert on Solana at 145 to tell me if it gets down there. If it gets down towards 145, then I will be looking at it and thinking, maybe I've got to be a little bit more careful with it. But right now, that's all I have about the futures and crypto. Let's go and take a look at some stocks. I've got a number of them actually that I've been asked about. So let's just first start out with those. And the good news is, if you don't get an opportunity to ask me a question about a stock, most likely somebody else has already asked about your stock, because it tends to be, the more liquid names. So Unity is one that I'm being asked about, and Unity's got, a nice looking weekly chart. It's not a great looking weekly chart, because if you look back here, we have this prior band of support from 2023 that's kind of maybe trying to hold as resistance here in 2024 and 2025. So I look at this weekly chart, and the only good thing I can say is we've got the 20-week rising above the 31, above the 42-week moving average. And then onto the daily time frame, you can see that we're holding the year-to-date anchor. This move higher here came on big volume. So looking at a 15-minute time frame, we're stuck below declining 5 day moving average. So I look at it and say, we're going to have to get back above that just to become neutral. If it gets up above that 5 day moving average, that 5 day moving average will be flattening out. For now, though, I look at it on, two time frames here. And, on the left is the daily time frame. On the right is a 30-minute time frame. And I look at it and say, while it's below that declining 5 day moving average, you've got some time to let it settle down, because maybe it's just going to continue along this pattern, and it might end up failing. declining. If it pulls back down into this zone, this is going to be an important level for it. This is last year's anchor. That's the thick black line. This year's anchor is the green line. The red is the 20-day moving average. So I would be a little bit, I think that it's worth keeping an eye on, but you want to see this stock do something more along the lines of this in the coming week or so, and then get that 5-day moving average to kind of flatten out, then buy some strength. But for now, there's no hurry to get involved in Unity, but I think it's worth keeping an eye on if that's of interest to you. Ford, it ran right into the last year's anchor perfectly. The 200-day moving average is declining, and I kind of viewed Ford. Let's look at the weekly chart. Ford is just like they say, found on the road dead. And that kind of applies for the stock here. It's just been a big nothing for the last 3 years. So I don't really see anything compelling here. I guess on a shorter term time frame, the 5-day moving average will be advancing. So maybe if it can get above this level here with a stop down here, it makes another run for this 1075 level. That's 50 cents away, so it's not huge upside. Ford, again, the weekly chart would tell me that it's probably just not worth it. That's the way I look at it. So Ford, LTBR, I call it light beer. It's got a average true percentage range of 14.4%, meaning the average range from the prior day's close to the next day's low or high, depending on whether it's up or down, on average is 14.5%. It did half of that on Friday, so we had a slightly lower volatility. If you're going to trade these stocks, basically, my theory is that any stock that has an ATR percent over 10%, if you have to ask about the stock, you probably shouldn't be trading, because these are high octane stocks. If you're going to trade the stocks, with these high octane, and you're still willing to do it, then maybe you do so with smaller share size. But I'd like to see it pull back, make a higher low, and then perhaps get going. This could be, similar to the last two consolidations, that it's a trap that, traps people, and you've got to be very quick to get out of this. If so a worst case stop would be down here. What I would prefer to see is a pullback and go. Hertz, this is one that Alpha Trends members got right involved on this over in here, and we have kind of avoided it since then. It's still below this declining 5-day moving average. It's below the declining 20. It's at the rising 50. It's at the year-to-date anchor. If it gets back up in this zone, it makes it a little bit more neutral into next week, that it could maybe build a little bit of a base and get going. I think that if you're going to look to get involved, your worst case stop goes under Friday's low. And let's just take a peek at that weekly chart. Here's the anchor off of, why isn't that working right now? Off of this, what is that high? Why isn't that showing? Anyways, maybe it's going to make a run for that 1070-ish level if it can get going, which is obviously a nice move. So it's worth keeping an eye on. It's right on, as we said, the thick blue year-to-date anchored VWAP, and the dashed one is a 50-day moving average. So if it can settle down in here, I think you want to buy Hertz. You do it with a stop, below Friday's low. If it continues lower, obviously that low isn't going to be a place to put your stop under. So I think it would, if it took Friday's low out, I think it would have to rebuild, and then you'd have to look at it with fresh eyes. Snowflake, this one is, it's just run from 120 to 210. So it's run, 90 points on a $120 stock. That's 75%. So it doesn't mean it can't continue to move higher, obviously. That's never what it means, but it's not in a low risk area the way I see it. And when you look at, the personality of the stock, its ATR is only 3.5%, but it's got some big moves. So just be aware of that. It's tightening up, maybe above here with a stop below there. It's not my type of stock to trade up here after this 75% move. Again, doesn't mean it can't work, but not one for me. DOCS, DOCS is kind of, it's in this big range. And here's been the range of the last several months is 50 to 60, and it's rapidly approaching that level. So we say, where has it come from? It's come from 50, and it's done so in the last 2 weeks. Where does it have the potential to go before it's likely to encounter a source of supply that might be strong enough to become resistance? Well, prior support broken tends to act as resistance, and we've seen supply released in this zone the last trip up here. Well, we look at the anchor from this high. This isn't the all-time high, the year-to-date high. The anchor is right here. The year-to-date anchor is right here as well. So when I look at it and say, maybe it's gonna, and it doesn't mean it has to, halt there, but this is where it has potential to find supply. Right up in here at 60, 61, and here the stock is at 59. So is the risk worth the reward after it's just rallied, basically 18% here in the last few weeks? In order to buy DOCS for a bigger trade, I would prefer it does something like this, builds on the daily time frame over the next couple of weeks, carves out a higher low, and then it would be a better opportunity. Up here, you're getting a little bit stretched. If the market starts to pull back, then it's going to pull. But this is the type of stock that can pull back 2, 3, 4 points very rapidly without much warning. TEM. Now, here's a stock with a schizo personality, and this one's a 10% ATR. If you look at this daily chart, I mean, you've got to be a skilled trader to be involved in this name. Look at, how it's traded historically. And does the personality of the stock make sense for you? I would say if you're going to trade the stock, you don't do it with a full risk unit, because the erraticism of this name is just it's back and forth. It's the subject of a who the it's not Hindenburg, it's one of those, maybe it is Hindenburg, I don't know. It's subject of some short sellers calling them all frauds and this and that, and the company comes out and defends themselves. And look at this stock and think, how do you feel? Let's say you were buying it right here, and then the next day it goes down here, and you think, oh, well, I'll put my stop below that. It's going again, and then you get stopped out down there. It's just a difficult stock. I personally don't like, this one. To me, it's a little too schizo. I don't like the personality of it, so it's an avoid for me. I can't really give you good advice on these, higher octane stocks. When they have a 10% range, you've got to be, highly skilled to trade them. How about American Airlines? American Airlines, it's a nice consolidation in here recently. Maybe on Monday you get a little bit of a pullback and then buy some strength with a worst case stop under here. Where does it have the potential to go? I think up to the year-to-date anchor. Last time it touched it right here, it did so perfectly and got rejected. So, again, is the risk worth the reward? That's something you've got to decide for your personality. For me, I think there's probably better stocks out there. And that 50-day moving average and 20-day moving average are rising. So let's take a look at the weekly chart. And again, look at the personality of this stock. It's, and to me, that's a big part of stock selection is what's the personality of the stock. And when they have this crazy type of movement, they're generally not for me. Fastly had a nice little shakeout here last week. It got back above the 5-day moving average, and here we had another shakeout. I think your worst case stop goes under here. You could probably buy it on strength as it breaks these lower highs. This was the shakeout. You could initially put your stop below Thursday's low, and if the stock were to start getting going, then raise your stop up under here. By the way, when I talk about stocks, just as a reminder, I always talk about them from a swing trader's perspective. If you tell me, a different time frame, that's a different story, but I'm talking from my perspective of a swing trader. GUR, where has it come from? It just ran from 17 to 23 in the course of 3 days. Where does it have the potential to go before it's likely to encounter a source of supply which might become resistance? Why do I keep repeating those phrases? Because I want to drill them into your head. So when you look at a stock, you look at it and say, has it expended a lot of energy? 17 to 23. That is a big move. That's about a 30% move in 3 days. Where does it have the potential to go before it might find supply? Prior support tends to act as resistance. The year-to-date anchor, has that shown any significance for this stock? Well, over here it was resistance, over here it was support, and now is it going to become resistance again? It has a history of making moves around that year-to-date anchor. So I think that GER would cause a lot of frustration from a trader's perspective. And here's another one. Its ATR percent is 10% also. So, these are the types of names that, yeah, they're the high octane names, but, the sword cuts both ways. If you're going to trade them, then, just know what they are and know what what your risk tolerance is. SEPN, I've never heard of this one. And they trade 2.7 million shares. It's above the year-to-date anchor. Here's the anchor from the IPO, is that black line. So it trades a lot of volume. And I mean, your worst case stop in a stock like this would be under here, maybe even under there. It looks like it could, if it can get back past this anchor from the IPO, maybe it makes a run towards 16. It looks worth keeping an eye on. It's plenty liquid. Earnings are due June 26th, so just remember that in a couple weeks. ADVD, I don't think I've heard of this one either. AVDV. And that's why it's a small cap value ETF. It trades 450,000 shares a day. It's in a beautiful uptrend. I mean, I wouldn't personally buy this up here. If you're going to, your stop goes under here. I think if you're long AVDV, the name of the game is to manage risk. It's been riding this rising 5-day moving average, so I would put my stop underneath the most recent relevant higher low at the rising 5-day moving average. So I'd have my stop under here. If the stock makes another higher high, I would raise my stop up under here. So again, if you're in it, great, buying it. Some of these are getting a little bit too stretched. Microsoft, same exact story. It's at all-time highs. It's just broken out after a big move. So it's just rallied from 350 to 470. It's rallied 120 points. Again, that's a 35% move. Doesn't off the April low. Doesn't mean it can't continue to move higher, but it's getting a little stretched here short term. So if looking for an entry, I think you'd want to see it settle down and then buy strength after a pullback. Otherwise, raise the stop up underneath the higher low best suited for your time frame. REGN, Regeneron, it's just a broken biotech stock. When these biotechs, break, they're just, it's broken. It's in a horrific downtrend. We have bullish things going on in the market. Why focus on trying to buy something in a downtrend like this? And again, if you're asking me about a stock, I'm assuming that you're looking for it as a long, unless you tell me otherwise. But it's above the 5-day moving average. So if it's in your risk tolerance to buy it above here with a stop underneath this recent low, then that's how I would trade it. So above Friday's high with a stop under Thursday's low. But it's not a trade I would take because I don't know anything about Regeneron Pharmacy. I don't know if this is in the crosshairs of Bobby Kennedy. I don't know if this is, a science gone wrong, and that's why institutions are dumping it, because they're clearly dumping it. It trades, 1.6 million shares a day, and this wasn't your father-in-law. They're dumping his shares. That's some big institutions. So I personally, maybe that was the bottoming print. So if it's in your personal risk tolerance to buy a biotech stock, with all this, then I think your initial stop goes under here. If it makes a higher low, start raising your stop up. Be aware of key moving averages overhead, as it might encounter those. And if it were to get back above in here, then I think it could begin a bottoming process. But if they don't scare you out, they'll typically wear you out. So it's not a great momentum type name. Affirm's getting a little bit extended here near term. Again, it doesn't mean it can't continue to move higher, but I think that, after a pullback, you want to be a buyer of strength and then set your stop under the higher low that makes sense for you. It's coming into this zone here where, it doesn't mean it has to find supply ever, but it's, this is the type of stock that can continue to move higher. So I wouldn't buy it as it's stretched up here, but if it were to pull back and then start to show some strength, I think you want to buy it, on strength after a pullback. MDB. This one's just kind of a broken name that where does it have the potential to go before it's likely to encounter supply? And when we look at that daily chart right here, it's got a declining 200-day moving average right here. It gapped up on whatever. This prior support, again, support broken, tends to act as resistance. Where has it come from? It's just come from 140 to 220, 80 points. It's better than 50%. There's a lot of people trapped in this stock looking to get out. To me, if you're going to trade this stock, you've got to look at it on a shorter term time frame and say, okay, where's the anchor from the event? The anchor from the event is here. So right now, on balance, the sellers are in control since this gap up. I think you need to monitor the shorter term time frames and look for the possibility that it could turn, but there's nothing there, suggesting it yet. Apple, it's kind of in no man's land the way I see it. It's really choppy in here. From a swing trade perspective, I just don't see it. We're right at the declining 50-day moving average right in here. But it's Apple. It probably will make a run. If it makes a run, it will go up into here. You could get away with a stop underneath Thursday's low if you're looking to get involved in a new position. Otherwise, Apple has been, kind of a dog here. So I would say, you want to probably go with something that's, in a better uptrend. UAMY, I don't know that one either. 3.8 million shares, U.S. Antimony Corporation. What are they? Let's take a look at the weekly chart. So this is one of those, again, always, if you don't know the stock, go back and look at the person, the history of it to try to get a sense of, it has these big moves. How does the market treat it after these big moves? A lot of them get crushed. Doesn't mean it will this time, but that just should raise your caution. Now, last week we pulled right back into the 20-week moving average at 225 and rallied to 350. So it pulled back and rallied 50% last week. It's probably in need of some settling down a little bit before it's a new purchase. Now, it's, look at the anchor off of this, off of Friday. So it's holding those. So the buyers are still in control. And if it were to, it's not a stock I would trade, but that doesn't mean it can't be traded successfully. Maybe it's going to pull back to the anchor from Thursday. It gets back above the 2-day and then above the and then maybe it's a buy on strength over here with a stop under there. If you're long it, raise your stop up under the level that makes most sense for you. How about Lilly? Lilly is a broken stock in a downtrend. The year low above the 5-day, under the year-to-date anchor. It's a broken stock in a downtrend. It's been in a downtrend since 2021, and there's nothing here suggesting that it's turning. Maybe it makes a bounce, but it's still in a longer-term downtrend. I just think there's better opportunities if you're going to trade it against. Even in here, look at the personality of the stock. Gap up, gap down, gap up. I don't even know what, be careful. Here's what I would say when you're looking at a 15-minute time frame like this. Whatever you do, don't get involved first thing Monday morning and get all excited. Look at how the stock trades the first half hour of every day last week and the week before that as well. So this is a stock that it didn't, that day was okay. But in general, when you look at the personality of the stock, it's a stock you want to let it settle down for the first 15, 20 minutes of the day, unless you're buying it, let's say, at the 5-day moving average against this low. Then maybe as it rallies up, then you sell a little bit on strength in case it does this again. But longer term, it's still, that's ILMN. How did I get ILMN out of LLY? There's Lily. Okay, well, there you go. There's a different story. I don't know how I typed that in, but if you're involved in ILMN, you shouldn't be, I think. Lily has been flirting with breaking down on a bigger picture. This is the anchor off the 2023 low that was previously discussed, and it came down and hit that. Now, though, it's below the 20, 31, and 42-week moving average. On the daily time frame, it's up against the anchor from April 7th. That was the day the market bottomed. So this has clearly been a laggard. It's got a declining 50, declining 200-day moving average. I don't see anything really to be excited about here, Paul. It's made, again, here's a stock that's gone from 710 to 770. So it's just rallied 9% in the last week, right into the anchor off of the April 7th low, right into the declining 50-day moving average. Is the risk worth the potential reward? Well, if it can continue to move higher, maybe it makes a run for 830 points. So maybe you want to say buy it with a stop under here, but I would say smaller share size given the fact that it's just run 8% and it is at that anchor from April 7th. How about let's take another look at Mobileye because I discussed that one last week. And Mobileye, I still like the way this one's setting up. It's an erratic stock. It's got a good size short position. I think the momentum really comes into it up above here. But it's got a big short position. I think it can make it up towards that 20 level. They are profitable. They've had good runs recently. The problem is the personality of the stock is pretty schizo in here. I got back involved in it on Friday with a small piece. It's a small piece because I don't like that volatility. How about ALAB? ALAB, it's looking like it wants to hold this level. Kind of the way Tesla looked like it wanted to hold that level at the 20-day moving average. So look at Tesla. And I'm not saying Tesla is, is going to tell us how this stock trades. But if you look at the similarities of the two, it kind of looks like Tesla did before it got hit. So just be careful with that. This is clearly the level that was similar to Tesla right here. Okay. So this 20-day moving average, where were we in Tesla before the big breakdown? We were below declining 5-day moving average. How about ALAB? We're below a declining 5-day moving average. That 5-day moving average is likely to decline at a more accelerated pace, in particular Tuesday and Wednesday, unless this stock recovers quickly. I think you've got to get it back above 94 to make it neutral. Otherwise, it runs the risk of the other option would be it breaks down, traps shorts, recovers quickly. Either way, I don't think it's time to buy yet. Let it settle out a little bit. Let it figure out how it wants to hold this, handle this 20-day moving average and this band of support. Is it going to bust it the way that Tesla did, or is it going to be able to push up higher through there? APPS, here's a speculative little name with an 11% ATR. If you're going to trade these names, set your stop underneath the higher low that makes sense for you. And again, look at the personality of the stock. Is this, it's not a blue chip stock by any measure. And it has the personality of big runs, which then completely fail and leave people holding the bag. So if you're going to trade these, know the personality of the stock. This is, a stock that could likely really, do some damage to you. Longer term, it's making a nicer base. It's held the 20-day moving average in here. So over to the 30-minute time frame, again, just know where your stop goes in there. And I think you've got to be a more skilled trader than most people are to trade these 10% ATR names because, bad things can happen with them. And I wouldn't discourage you from trading them if that's your interest. Someone's interested in DJT, which, it's making this, anything could happen news-wise in here. And, I think this is more of a political play than a, earnings play, that's for sure. But if you look at what just happened in here, this support was broken and that support is now acting as resistance. So on the daily time frame, I think you need it back above 23.5-ish or even probably 22.75 to make it more neutral. But now we're below declining 20, 50-day moving average, 200-day moving average has been holding as resistance here the last couple weeks. To me, DJT is, you've got the risk of, you've got headline risk every day in it. So they bought some Bitcoin like everybody else does. That headline doesn't seem to be helping companies anymore in terms of, hey, well, this company bought Bitcoin, so we're going to, push their stock higher. And they've got their own crypto projects. I get that. But I'd be a little bit weary of this one until it gets back above 2275. It's looking to me like a pattern of lower highs and lower lows below a declining 20, 50, and 200-day moving average. Everything I know tells me that that is not a bullish look. Celsius is, making nice higher lows above this month-to-date anchor and the 5-day moving average. Stop under here if you're involved. If you're looking to get involved, let's take a look at the weekly chart, see what we have up ahead. We're above all these anchors, so that we're right on that anchor. So, just be aware of that. It doesn't mean it can't continue to move higher. It's got a nice looking consolidation here the last 2 months. From a bigger position perspective, these are beautiful higher highs and higher lows. My concern is that, similar to this run might need a little bit of digesting before it continues to move higher. Otherwise, Celsius is in a nice uptrend. I would, protect a stop underneath this 39-ish area. How about Target? And we'll make this the last one. Target's just a broken stock in a downtrend. Let's see if we can find something else that someone's interested in that looks a little bit better. HNST. This is HNST. Is this the, what's her name's company? The actress. It's just kind of neutral here, not really. And again, look at the personality of the stock. This is, that's a pretty choppy name for a stock that's just grinding higher. I don't see anything particularly useful. We've got CPI this week. We've got PPI. We've got some earnings from, I don't know, nothing huge. Oracle, I guess, is a big one. I'm just looking at that. I probably should have paid more attention. Apple's got something going on this week. NVIDIA's got an Investors Day, I think. So anyways, that'll do it. Hopefully this was useful to you. Thanks for taking time out of your evening, and hope you have a good week of trading. Thank you.